Good morning. This is George Kachuk with Know Your Options Inc. reporting to you from the CMU Group trading floor in Chicago. The market correction continues. About 2 weeks ago on October 26th, the NASDAQ market made its low 29.61, bounced off that, reclaimed its 200-day moving average, and pretty much has been bouncing above that and attempting to rally from these levels. Now, last Thursday, we had a really strong rally attempt to the upside. However, that was only day 3 after our bottoming day. Doesn't quite qualify for our confirmation of a follow-through day. And sure enough, Friday we reversed to the downside, and today we're just bouncing around still off that 200-day moving average. Pretty much the same thing on the S&P 500. October 26th, the low was at 1403. The S&P hasn't undercut that low yet, so that's our first day of a rally attempt. We're still trying to see if we can find any upside from there. So for now, the point of least resistance is still to the downside. The market's in a correction. In the last few videos we talked about, don't be buying anything yet till we get a confirmation follow-through day. Now, the more important news is the election. The election tomorrow, and what can you expect? Well, what I'd like to do is take a look at the gold market. The gold market's pretty good at discounting what may be happening in the near future. Now, gold has been coming off pretty hard lately, and if you look at the GLD chart, gold's at about 162, just right above the 200-day moving average of 161. And it came into that on some pretty heavy volume. We've seen a lot of heavy selling in gold. Now, gold may be telling us that it's a win for Romney, with the idea being that as Romney gets elected, Chairman Ben Bernanke will probably resign from the Federal Reserve, and that would be the end of QE infinity. And so gold will probably continue to drop. Now, of course, if President Obama gets reelected, you might want to look at that gold trade, because I would expect to see a bounce in the gold market. I would expect to see a bounce in the bond market. Bond yields would drop, bonds would rise. Now, of course, if Governor Romney wins, you might also see a rally in the equity markets. This may actually give us the shot in the arm we need to confirm our rally attempt, with the idea being that fiscal spending will be reined in and that we have a business-friendly environment in Washington, so this would all be good for the equities. Now, of course, you don't want to really position yourself too strong either way ahead of the election, because the election can surprise us, and the markets likes to make fools of us as well. So wait to see what the election results are and look for these two opposing trades and see how you might want to position yourself. Now, as always, let price and volume be your guide. This is George Kachuk with Know Your Options Inc., reporting you from the CMU Group trading floor.